Defying gravity, homebuilder stocks soar amid high rates. The stock market often appears to dance to the beat of its own drum, defying the logic of conventional wisdom. Today's performance of homebuilder stocks epitomizes this enigma. Despite soaring mortgage rates that have propelled the 30-year fixed rate to its highest point in over 2 decades, shares of major homebuilding companies are exhibiting remarkable resilience, even posting gains. This perplexing trend has left many market observers scratching their heads, wondering what is fueling this unexpected surge. The answer lies in a confluence of factors, a perfect storm of economic trends, investor sentiment and government policies, all converging to create a uniquely favorable environment for the housing market. This essay will delve into this intricate interplay of forces, unraveling the mystery behind the buoyancy of homebuilder stocks in the face of high mortgage rates. Understanding these dynamics is crucial for investors seeking to navigate the complex world of real estate investments. Supply and demand, the foundation of housing strength. The housing shortage is a multifaceted issue with roots in a confluence of factors. The Great Recession of 2008 cast a long shadow on the construction industry, leading to a significant slowdown in new home building. This trend was exacerbated by a shortage of skilled labor, rising material costs, and restrictive zoning regulations in many areas. As a result, the inventory of new and existing homes for sale has been depleted, creating a seller's market in many regions. Simultaneously, demand for housing remains robust. Millennials, the largest generation in US history, are entering their prime home-buying years, forming families and seeking out more space. This demographic wave is colliding with a housing market ill-equipped to accommodate their needs, further intensifying the supply-demand imbalance. The result is upward pressure on home prices, even in the face of rising mortgage rates. This imbalance is particularly acute in desirable locations, such as urban centres and suburban communities with access to good schools, amenities and job opportunities. In these areas, competition for a limited supply of homes is fierce, driving prices even higher. Home builders, recognizing this dynamic, are strategically focusing their efforts on these high-demand markets, catering to affluent buyers who are less sensitive to interest rate fluctuations. A thirst for yield investors flock to homebuilder dividends. Another factor contributing to the resilience of homebuilder stocks is their attractiveness to income-seeking investors. In a low-yield environment where traditional fixed-income investments offer meager returns, the dividend payouts of home-building companies have become increasingly enticing. Many of these companies have demonstrated a commitment to returning value to shareholders through consistent and growing dividends, making them an attractive option for investors seeking a steady stream of income. Furthermore, the performance of homebuilder stocks is often seen as a barometer of overall economic health. A strong housing market is indicative of consumer confidence, job growth, and a positive outlook for the future. As a result, investors may view these stocks as a hedge against broader market volatility, particularly during times of economic uncertainty. This positive sentiment is further bolstered by the government's role in supporting the housing market. Policymakers recognize the importance of housing as a driver of economic growth and have implemented various measures to encourage homeownership. These include tax incentives for home buyers, subsidies for affordable housing development, and efforts to streamline the regulatory environment for builders. These policies provide a tailwind for the industry, fostering a favorable climate for continued growth. Section 4. Government incentives, fueling the engine of growth. One of the most significant government incentives supporting the housing market is the mortgage interest deduction. This allows homeowners to deduct the interest paid on their mortgages from their federal income taxes. This deduction reduces the effective cost of home ownership, making it more affordable for many Americans. Additionally, the government provides tax credits for first-time homebuyers, further stimulating demand. Beyond tax incentives, the government plays a crucial role in financing mortgages through government-sponsored enterprises, or GSEs, such as Fannie Mae and Freddie Mac. These entities purchase mortgages from lenders, freeing up capital for more lending and increasing the availability of mortgage credit. This government backing helps to stabilize the mortgage market and ensure that borrowers have access to affordable financing options. Furthermore, the Department of Housing and Urban Development, or HUD, administers various programs to support affordable housing development and promote home ownership opportunities for low and moderate income families. These programs provide funding for the construction and rehabilitation of affordable housing units, as well as rental assistance to eligible households. By expanding access to affordable housing, the government aims to create a more equitable and inclusive housing market. Section 5. Navigating the labyrinth, inflation and interest rates. However, the rosy picture painted by strong demand and government support is not without its challenges. The spectre of inflation looms large, threatening to erode consumer purchasing power and potentially dampen demand for housing. As the cost of goods and services rises, households may have less disposable income available for mortgage payments, potentially cooling the housing market. Furthermore, the Federal Reserve's efforts to combat inflation through interest rate hikes have pushed mortgage rates higher, making home ownership less affordable for some buyers. While the impact of rising rates has been somewhat muted by the housing shortage, it remains a significant headwind for the industry. If rates continue to climb, it could eventually weigh on demand, particularly among price-sensitive buyers. Despite these challenges, the long-term outlook for the housing market remains positive. The fundamental factors driving demand, such as population growth, household formation, and a desire for home ownership, are not expected to dissipate anytime soon. Moreover, the housing shortage is likely to persist for the foreseeable future, providing a supportive backdrop for home builders.